What is going on, traders? Welcome back to the Traveling Trader. So this is the separate stock market update for today. I've decided to do different videos today and test that out and see how it is. Again, we've amassed a large number of traders in our trading group, and everyone has different preferences as to the markets that they're trading and how their portfolios are distributed. So I'm trying out doing separate videos for stocks and crypto, and yeah, we'll see how that goes. Let me know in the comment section below if you'd rather have one video for crypto and one video for stocks, or just condense them in one video as we've been doing in the past. So the Dow posted the biggest drop in a single day yesterday, as most of you know. And I wanted to talk about dip buying opportunities and what the stock market looks like historically after such a big drop. Now, obviously, as you know, the markets have been posting record highs, and we've been trading those accordingly, making sure that we set stop limits, because as the market approaches new all-time highs, traders get a little shaky, right? So even in the short term, you might hit a high, and the confidence in the market is that we don't belong at that high. So you'll see a decline and then a retest of that high once again. And you'll see that play out on something like the SPY, which is the ETF that trades against the S&P 500, right? We'll hit a high and the market won't be, if we go back to October 2018, you'll see that we hit this high. The market doesn't believe in that rally. They're in a bit of disbelief. We go back to retest the 21 exponential moving average back up to that high. Again, the market doesn't believe in it. We get rejected, and so on and so forth. And then we finally see this big correction that we saw back in December, and then a retest of the same high once again, and then a disbelief rejection and a retest of that high. So this is a cycle that continues, so on and so forth. Now, yesterday, we had the single biggest drop in 2019, and it wasn't just because we saw, we were retesting all-time highs, but I talked about this yesterday, and this all has to do with the US-China trade war, right? So basically, the Chinese government or the People's Bank of China have manipulated the currency or have set their exchange rate deliberately low to offset tariffs that the US is imposing on Chinese goods. I know that that's a mouthful. It's a chain of events that might be hard to follow if you're not in the know with regards to economics. But because of this ongoing US-China trade war, and China actually is big enough of an economy to impact the US through certain practices, however ethical or unethical they may be, a market that is already testing all-time highs or retesting all-time highs, which is already a shaky event, is definitely not going to respond to this rationally, right? We're going to overreact. So we saw the biggest drop in 2019 yesterday, but here's what happens if we look historically when the Dow has dropped at least 2.5% in a single day. And yesterday we dropped almost 3% in a single day. So if we look at the history, we'll see that this has happened 30 times since 2009. And when the Dow drops 2.5% or more in one day since 2009, 83% of the time, 5 days later, we see an average return of 2.3%. So almost a full recovery if we're talking about 2.5% or so 5 days later. 1 month later, we see a 4% average return, and that happens 73% of the time. Now, why is that? Well, it's because people overreact, right? You have a large number of people that overreact, or some are taking profits, or some have stop limits like I do. And so it becomes a snowball effect where people are selling up, where there's a lot of sell volume. If you look at something that Warren Buffett said about the stock market, he said the stock market is a device for transferring money from the impatient to the patient. Now, while I believe in setting stop limits in the short term, that is true over the long term, right? Like when the markets crash, people tend to sell. But when you're selling stock, who are you selling to? You're selling to a buyer or a group of buyers, right? Like there has to be a buyer in that exchange, in that transaction. You're not selling to the exchange itself. You're selling to somebody else who's willing to buy from the exchange. The exchange is just a conduit to transfer money and stocks back and forth. So eventually, if you want to become a successful trader, you have to learn to be that person who's waiting like a vulture to gobble up these cheap stocks. As a matter of fact, really the first time that I ever made money in the stock market was in 2008, when I came to the realization that, hold on, Coca-Cola is not going anywhere. Intel's not going anywhere. Nike's not going anywhere. The Dow Jones, for God's sakes, was at 6,500. Yes, this Dow Jones was at 6,500. So when I came to that realization that these companies aren't going anywhere, I took all the money that I had and just bought up as many of these blue chip stocks as possible without even really looking at any of the valuations. I wasn't, trying to buy new companies or emerging markets or whatever. I just stuck to old blue chip, good old American companies, Nike, Ford, Coca-Cola, Intel, etc. And not only was that the most money that I had ever made at that time, but it was the easiest money that I ever made as well. It didn't take any sort of technical analysis or levels or swing trading. It was just the realization that unless I truly believed that the stock market was done forever and that the US markets were done forever, I'd be selling myself short if I didn't put all the money that I can in this market. Now, obviously, it has to be money that you're okay trading, et cetera, et cetera. That goes without saying. Disclaimer, disclaimer. You shouldn't be taking out mortgages in order to trade. It should be money that you don't need for liquidity, obviously. And if we look at the history of the S&P 500, we just looked at the Dow, but if you look at the history of the S&P 500, the S&P was the hardest hit index by this China trade war. Whereas the Dow was down almost 3%, the S&P was actually down 6% yesterday. Now here's what's interesting about the S&P. Since 1929, the US benchmark has experienced such a scenario, a slump of more than 5% within 2 weeks of hitting a multi-year high, the phenomenon that we just talked about with the SPY. 16 times, not including its current run. So this happened 16 times since 1929, where there's a dump of more than 5% within 2 weeks of hitting a multi-year high. For 10 of those, the index jumped back to a fresh high, while it fell into a correction only 6 times. And even amidst all of that, the gauge never dropped into a bear market, which is a decline of 20% or more over a couple of months. The gauge never dropped into a bear market within the next 6 months. And funny enough, if you follow me on TradingView, I posted an idea a while ago. This is now in June 20th of 2019. And I was comparing the S&P 500 index, what happened back in 2015 and 2016 with what is currently happening. And if we load the new bars, you'll see that, I didn't know, I wasn't taking the China trade war or anything into account, just based off of historical, what that article was just talking about. After hitting multi-year highs, you tend to see a slump because of the disbelief rejection, followed by a rally again. And that's exactly what I thought would happen. And that is what happens time and time again. It's not like I'm a fortune teller, but it's because it continues to happen. Now, obviously, there are a lot of fundamentals in stocks versus something like crypto. So, if the trade war does extend and it gets more egregious and more irrational, yes, it could spark a sell-off, and more lows are in the cards. But for now, I'm definitely buying the dip on a few stocks. And if you want access to the trade alerts, that link is in the description. I send them out on the Discord. The Diamond Traders and above gives you access to the stock trade alerts as well as the crypto trade alerts. I haven't yet felt a need to separate out the Discords where I have one for crypto and one for stocks, but they are on different channels within the Discord. And a couple of stocks that I'm looking at, Netflix, forming this ascending triangle, holding support here very nicely. These are pretty low risk buys because you could set a stop limit right beneath the support. I'm looking at Activision Blizzard, which is actually reporting its earnings this week, currently holding at the 150-day moving averages. I'm looking at Disney, which is something that we made almost 30% returns on, buying all the way back in April and selling after the decline. And now I'm looking for a good re-entry price. Gold, we made a killing on, but I'm definitely looking to set a stop limit because as the US dollar recovers, as it is doing now, it slumped 1.5% yesterday, but you see it now bouncing and recovering. So as the US dollar recovers and the markets recover, then traders will feel less inclined to buy this much gold, and you'll start to see the gold prices potentially go down after forming 52-week highs. So I'm definitely looking to set a stop limit on my gold holdings to protect these profits. Anyway, that is it for this video. If you are new to the channel, subscribe, hit that notification bell for crypto and stock trading content. Leave a thumbs up if you got anything out of this video. If there's any videos or any topics you want me to cover, leave that in the comment section below as well. Sign up if you want access to the trade alerts. If you want to learn technical analysis and would like one-on-one time with me, we do that over video conference. That same link is also in the description. It's the Centurion level. Stay safe out there, traders. Peace.